Hi, good evening. Today's Friday, July 30th, the end of the month. S&P 500 closed up 6 months in a row. It's up around 17% year to date, and looking at all years that closed July by up 15 or more percent on a year to date basis, the rest of the years gone 13 positive and 1 negative year for an average of 3.4% up. So, looking at this data, it looks like the rest of the year is likely to stay positive, but it's not going to be anything spectacular like the first half of the year. But of course, this year has been different in so many aspects. So, taking this data with a grain of salt, of course. And one of the loser years that actually was a big one, it was 1987. It wouldn't be Friday, even though it's not the 13th. We need to scare the viewers a little bit, at least some Fridays. But statistically, the data looks positive for the end of the year. I mean, obviously, we may have some small pullbacks, like we talked about in the previous video. We didn't have a 5% pullback for almost 200 days, but a few other times we didn't have one for 400 days. So we may not even have it for the rest of the year either, but the odds are that it may happen. And also July is the 9th consecutive month not to trade down 3%. So we did not even have a 3% pullback, if my data is correct, for about 9 consecutive months at any point during the months. And so the only months that match this since 1970 is about five times that it happened, somewhere in 1985, 95, 03, and March of 2017 was the last time. So likely we will have slightly more than 3% pullback in the coming months, at least.
The tell in 1987, since you brought that up, the turning point in the market was in August, actually. It started sliding in August, and it wasn't until October, of course, that the crash happened. But the dollar as well, the stock market topped out and was sliding, but the dollar was as well. The dollar was pretty much sliding all year from the Plaza Accords, which were something like early 1986. And so the market was being stretched, or capital flows are being stretched, and that the crash happened only after 3 months down in the market.
And like we were saying as well in the previous video, that seasonality, August and September are historically the weakest months in the market. So it's reasonable to expect some pullback in the next few months. We have closed on the vol trigger level right around where we have closed. It's 43.95. AS was down 16 points, and we're really only about 30 points, less than 30 points from all-time highs. It was basically a range week. We closed very similar to where we opened, Fed meeting notwithstanding. It wasn't really any major moves during the Fed. Nothing really happened. We traded in that, I would say, more or less narrow range for the volatility level. It seems like the realized volatility is way below the VIX level. I would expect that next week the range for S&P 500 should be extended. And if I were to guess, probably both ways. That I wouldn't be surprised if we have all new time highs on Monday or Tuesday, 4450 or maybe even 4500. It's, those are magnets or constructional numbers, as Victor calls them. But at the same time, I don't expect those numbers to stick, and I think we will trade back into this week's range as well, and probably maybe even below. It's there is the amount of enthusiasm in the markets is still running pretty high. I talked to various people who keep telling me that they have, granted it's anecdotal evidence, but still who's saying that they have invested into S&P 500 and this is the best now. It's only going up. I'm making money every week. This is amazing. This is fantastic. It worries me a little bit. Granted, it may last for another month or half a year, but it reminds me just a little bit, well, maybe a lot, of 2000 and the internet bubble but right now we have bubble in not just internet stocks, but Moderna, for example, and vaccine stocks. The valuations are pretty high and they don't matter until they do. Like Amazon, that was reported and disappointed after hours and was down 7.5% after hours. And that's why Nasdaq pretty much opened with a large gap down, but it closed half of the gap by the time it closed, or maybe even a little more than half. Like I said, it was by and large not really an eventful week. And bonds the same way. The bonds maybe closed a little up for the week, but for the last couple of days, they also traded in a very narrow range, as you could see on the chart here. And like we speculated many times before, the infrastructure package is still on the table. And so Jerome doesn't want to rock the boat and get anything rates to go up to jeopardize the chances of the infrastructure passing. And who knows what's in that package anyway, and when will it pass? There's so much uncertainty about it. Today they were voting, then they stopped the voting, then they resumed the voting. Now they can't get their progressives in the House in line because they want more money for the solar panels and the turtles. But I'm sure it will pass eventually, and just the usual pork-laden bill from Washington, D.C.
One of the things that was interesting that we that Yelena and I were discussing was the fact that real rates have been in this very long-term secular decline from the early 80s, and that there's been, although they've chopped around, it hasn't been just a steady path down. There has been this long-term trend down from 1982 to now, and we've seen just recently with COVID and the Fed's response to it, this precipitous drop that in some ways parallels what we saw in the 1970s when it was from to some degree because of high inflation that we experienced in the 70s, but also bonds were staying pretty steady or even rallying because of the stock market being bearish. And so in a way, we might be seeing something similar here, that inflation, while inflation might not be out of control, it's hard to say that the Fed is as concerned as maybe the last three predecessors to Jerome Powell were. And so in the 1970s, real rates bottomed out at about 3%, just under 3%. And we're now approaching that level. And the question is, well, they're now at, let's say, 10-year tips are at negative 113 basis points, which maybe not alarmingly low, but again, we're approaching this level that we saw in the late 70s. And the question is, is that sustainable? It could go lower, of course. There's nothing saying it can't. But if we were to see a bounce, that could mean a lot of structural changes in the market. We could see the stock market tank or really slide down. And at the same time that we're seeing bonds fall. And so that would be very much a reversal from what we've seen over the past 40 years in the market. It would be atypical behavior, and people would not have much experience trading this type of market. So I think it's something worth keeping an eye on, because I'm not saying I'm putting a lot of chips on this, but I do think there's probably 20% probability that it could turn into a situation like that where the Fed is slow to respond, and then inflation does get a little bit out of control, and they have to really step up rates, even despite the fiscal position of the federal government. And it could be a really challenging time economically. So, I'm saying there's probably a 15-20% chance of that happening, and it could be an excellent trading opportunity for people that are that are really aware of what's going on.
Right, and I wouldn't be surprised if they tighten into economy actually weakening. Thus, as they usually do, tighten at the wrong time and precipitate a recession.
Right.
The numbers came up again. More economic numbers are below expectations. The pending home sales were down around 1.9%, while the expectations were for a rise, and last was plus 8%. So pending home sales are not selling because the price is too high, sure, but nonetheless, without sales, there's a drag on the economy. And GDP also missed. It was expected for Q2 to be 8.5%, and it came in 6.5%. So that's a significant miss. So the economy is not doing as good according to the data as we were expecting, and other indicators as well we highlighted before many times. And the inflation expectations dropped just a little bit, 1 month over month, from 4.8 to 4.7 for 5 to 10 years, from 2.9 to 2.8. So inflation expectations, while still way above 2%, they just dropped a little bit this month. But Fed's favorite inflation indicator, PCE core deflator, actually rose from 3.4 to 3.5, the highest since July 1991, just kind of the numbers that you've been talking about. And even Bloomberg headline was that GDP price index jumps 6%, matching Volcker era levels. So many people are beginning to get concerned about inflation and Fed not doing much, and comparing the situation to Volcker with the real rates are so low as they are now. So the question is, how long can our Fed chair hold on and not do anything? I guess until the infrastructure bill passes, and then maybe he will get some leeway on scare the public.
Well, here's the question. So what we've seen is this in March, bonds bottomed out, so rates topped out, and then we've seen this rally since then, and there's no sign that the rally really is broken, that is stopping. Mm-hmm. However, if we look at let's say like a monthly chart going back, I don't think this goes back too far, but this is just part of, I mean, a very just as we saw with the real rates chart going down, it's just we're sort of in the channel for this very long-term rally, and despite inflation appearing to rise and get well above this reference level, we're still in the channel. There's no sign of alarm in the bond market, and so who's right? Are the inflation fear, those who fear some inflation returning to the market, are they right, or is the bond market right? That's the question.
I think they're both right. I think the bond market is not a good indicator for inflation. I think the bond market is just an indicator for Fed's policy, and the bond market is saying that Fed is not raising rates anytime soon. And so if I were venture to guess, we're going to break that real rate level going back to what, 1970, 80? We're going to make new low going there, because we're in a new paradigm. Everything is great. There is no need to raise rates.
But why would you lend money? If you're, why would you put money in the bank if you're losing money? By doing so, you just keep it under your mattress, right?
No, you put it in the stock market. Why would anybody borrow any money or actually lend money, right? But borrow at low interest rate.
You borrow it, right? Yeah, you borrow it and you buy a bigger house, and that's sort of the, that though is what really caused the, like, when there have been very high inflation episodes. I don't want to say hyperinflation, that's kind of an extreme thing, but just these high inflation episodes have come when the inflation expectations become cemented in place, and then people say, well, I'll just take out a 5-year loan, home equity loan, and put the money in the stock market, and I won't lose money because my house price will be 50% higher. The stock market will be 100% higher in 5 years. So why not? It's a no lose situation, and I'm only paying 3% on the money.
Right, and it's a wealth effect. People feel wealthier as long as their 401k number is larger and everybody spends. So as long as this continues, the economy and the market go up. But like we discussed before, there is one scare that keep hanging over the market is obviously COVID, right? It's Biden just made vaccines mandatory for millions of federal workers, and including military and on-site contractors, except for the post office, because apparently science believes that post office employees are exempt from getting COVID or whatever. They're somehow special. Or maybe their mandate is to deliver not only mail, but COVID as they go from home to home. That's why they don't need a vaccine. But
it just means that the Postal Workers Union is more powerful than the federal government,
one of the largest unions for sure, right?
Oh yeah, yeah, it is. It's a very powerful union. Yeah. Right. But the there have been some really there was a PowerPoint presentation that was leaked from the CDC, and it was shown on, I think Tucker Carlson showed one of the slides, but it's been circulating around on Twitter and some other websites, and some of these some of it showed something kind of interesting, that there were outbreaks of Delta variant, which has been the reason for some of these restrictions going back in place. And what they found is that that in the small outbreak that they studied, that they put in this presentation, that there was no one who died who was either vaccinated, fully vaccinated, or unvaccinated. So nobody died in the outbreak that they studied. But there were more people that were hospitalized who were vaccinated than the people who were unvaccinated, even though there were more unvaccinated people in the study. So what it may be showing, which is, it's been hard to get this kind of information, which is that the vaccinations don't seem to provide the same protection against the Delta variant that they did against earlier strains of this virus. And so but they're not coming out and saying that because they still want people to go out and get vaccinated, because maybe vulnerable people do benefit from it. But still, it's like there's a lot of information that's not really being communicated in a clear way, I don't think. And I think that's contributing to some of the confusion.
Well, I think people who are, first of all, I think people who are in charge are totally confused, and they're not really scientists. They're more like politicians in a way. And so they say whatever their agenda is, and they really don't know what they're doing. Because even some banks and lots of people who are really left leaning are just saying basically, this is ridiculous. You keep moving the goalpost every week, starting from 2 weeks to slow the spread to now 2 years of complete nonsense. And I think the study you're referring to, or maybe that's another one, the CDC study showed that 74% of people infected in Massachusetts, COVID, were fully vaccinated. 74%, vast majority are fully vaccinated. And I actually have a friend in the area where I live who has family there who said that her whole family was vaccinated except for a little girl who's 8, and they all got COVID, and even the little girl, but she had no symptoms. But anyway, so out of those, at that study, 5 COVID patients were hospitalized, and 4 of hospitalized were fully vaccinated. So that doesn't even provide protection from hospitalizations. Right. So in addition, the new data published, and it's actually on CNN right now, so I can't even say that it's fake news. It's true because it's on CNN. It's said that fully vaccinated people who get infected by at least this Delta variants carry just as much viral load in their respiratory system as unvaccinated people.
Hmm.
So all this time when they were saying that unvaccinated people are the ones who are like causing all this to spread, etc., etc., now it's the same thing for vaccinated and unvaccinated. And in addition, at least the unvaccinated people have symptoms, so you know to stay away from them, versus the vaccinated people have no symptoms, the same viral load, and they're walking around, delivering mail. So, but
Well, and in a way, I mean, I think that the reasonable way to look at this is that the Delta variant was in fact an evolutionary adaptation to the virus. And so it was the vaccine to the vaccine, that the vaccine was introduced into the market in the middle of the pandemic.
right.
When, for example, there was a 1918 Spanish flu pandemic, there were no vaccines for that until years afterward. And then, they were able to study it and figure out how to make the vaccine and so on. And then, now there's the annual flu vaccine and so on. But but in the middle of a pandemic, what they did is the intervention was the vaccine. And so the virus, because there's trillions of the instances of the virus in someone who's infected, I mean, there are enough mutations that some of them will survive, and those are the ones that get passed on and spread and so on. And the Delta variant, it was an evolutionary adaptation to the vaccine itself.
Right, absolutely. And we talked about it on our podcast months and months ago, because this is nothing new. You don't need to be a rocket scientist or you don't need to trust the science to know how viruses operate. This is absolutely nothing new. That's why flu vaccine has to be changed every year. And so now even Israel is saying that the efficiency of the vaccine is now 16% for those who took it in January. So lots of data that I saw shows that as time progresses, the efficacy of the vaccine wanes. And so now Israel is the first country who is trying to do a third COVID shot for people. And after, I think, above 60 years old, now they recommend a booster shot. And I'm sure everybody else would follow soon enough.
Well, there was some good data this last week for the Novavax vaccine. And I might have mentioned that before, but right now there's, in the US, there's Pfizer, there's Moderna, and there's the J&J vaccine. The Pfizer and Moderna are both mRNA type vaccines, so new technology. The J&J is not the mRNA technology, it's an older technology. But it's not viewed as being as efficacious as the Pfizer and the Moderna one. But this Novavax vaccine, it is a slightly older technology. It's the same one that's used, same tech that's used for hepatitis B vaccine, which has been around for about 40 years. And so if you've gone to a developing country in the last 30 years, you've probably gotten this vaccine. So it's safe, relatively safe technology. And in the study that they just submitted data for, it was more efficacious than any of the vaccines currently on the market. And it also had a better safety profile, fewer side effects from the administration. And so I think that will be one that will be worth watching when obviously Novavax, the stock popped this last week based on that study coming out. But as we've seen, Moderna and it didn't pop that much really. As we've seen, Moderna some of these, some of these others race higher based on the Pfizer's expected to see something like $30 billion over the next year from the vaccine. Now, they'll pay a lot in rebates to Medicare and Medicaid. And so not all of that will be profit, very little of it will be profit, but they'll get a lot of revenue from it. And I think Novavax could be a very powerful player in this, and it may be a little bit underappreciated, the degree to which that vaccine could really get some fast adoption.
Right, absolutely. And as more data is coming in about bad side effects, they just tested Pfizer on adolescents, and it's 90% safe. So only 10% have side effects, severe side effects. Only 10%, really no big deal of, 10% of children have severe side effects, including death. But,
there's only one bullet in the revolver.
Russian roulette, I'm all for it, always.
Hey, you wanna play a little Russian roulette?
Right.
Yeah.
Exactly.
Well, it's I think it's for people certainly that are have some sort of immune compromised condition or respiratory disease, or
right.
they have obesity, or they're not,
which are not children.
I mean, it does make sense for those people, but like for healthy people, it may not have the same benefit. Or children, that sort of thing.
Lots of corporations are mandating the vaccines as well, not to be outdone by the government. Walmart, Disney, they make all of the employees take a shot. And I think Walmart is even paying $150 for each shot. And I think New York City pays $100 per shot. So I think people should just hold off. And in a couple of more weeks, it's going to be $200. So just wait a week and get more money. And
well, the thing, we were talking about inflation, and I would tie that to COVID a little bit. What we're just talking about COVID, with COVID, is that my view is that inflation, the famous saying of Milton Friedman was that inflation is everywhere a monetary phenomenon, right? That it's due to bad monetary policy, and that's why inflation occurs. And but I would say I would maybe go with a Austrian definition of it, which is that there's a psychological element to it. It has more to do with the breakdown of trust in institutions, and that what we're experiencing with this inflation isn't the Fed miscalculating something. It's people distrusting the government to manage a pandemic, or to manage the value of the dollar, and stability of prices. And that, well, maybe the people that told me last week that I don't need to wear a mask anymore, now they're insisting that I wear this mask, and even though I'm vaccinated, and they told me vaccines were going to end all this. Just the constant revisions, I think that creates the sort of the basis for an inflationary run.
Right.
It's a kind of distrust of the system.
Absolutely. And now, like, for example, UK health expert panel called SAGE said that the next COVID is going to produce a super mutant virus that could kill up to 1 in 3 people. And they claim that the vaccine rollout may even speed up the mutant strain emergence. And I've seen other reports where people were saying that you're not really supposed to do vaccine as soon as we have done with the new virus, because the virus needs to play itself out in the population first before we introduce very different conditions. And so perhaps maybe that's one of the reasons why in Florida now we have COVID cases in July going up, as we have a lot more people vaccinated, versus last July, the COVID cases were going down in July when we had fewer people vaccinated. So I'm not an expert, of course, but the more data I look at, the more it seems to me that the vaccine is actually contributing to increased cases as opposed to trying to reduce them.
Right.
But the issue is that why we've been talking about it, because it all affects the economy, the markets as well. For example, now New York City is trying to say that soon maybe de Blasio will create his own vaccine passports and nobody could go eat out or have a beer without a vaccine. And some states also make mandates for masking. For example, Washington, D.C. said that everybody indoors, outdoors have to wear masks above 2 years old. And Nancy Pelosi even threatened to arrest people in the Capitol if they come without a mask. And so Biden is not even ruling out lockdowns. He said that he's considering to renew, maybe potentially, not now, to renew lockdowns and close schools. All of this affects morale as well, not just actual thing. People don't want to spend. And we saw this in the data that the projection for people to spend have actually went down pretty significantly in the last few weeks. And Biden said that he even consulted with the Justice Department about mandating vaccines for everybody in the US. But he said that he's unsure if the government could do that yet. But obviously it's unrealistic to mandate vaccines in US, at least I think in the certain states, because the governors in Texas, Florida, and other Republican governors said that there will be no more lockdowns, mandates, mandatory anything. They just want people to make their own informative decisions.
What happens when George Floyd refuses to get the vaccination? You know, I mean, you know, I mean, I guess what I'm saying is that
I know exactly.
there are civil rights issues associated with this that it seems to run, you know, right in conflict with, you know, with this, you know, all the sensitivity on the one hand of Biden administration about these civil rights issues, but yet they have no problem mandating vaccines or.
Well, all this time I thought it was my body, my choice. But apparently, you know, it depends on conditions. It's your body, your choice for this, not for that. You know, we decide when it's your body and your choice.
Right. Well, and I think that that's some of what is this emergence of the Delta variant. I'm not saying it's a driver of just jumping the crypto a little bit. I'm not saying it's a driver of this, but I think it's a contributor. I think it's, you know, this sense of like what's going on here, and the feeling that things are a little bit out of control. I think it gives some impetus to the rally that we've seen, which I think might have like Mike Novograd said that it started as a short covering rally, but you know, every rally starts as a short covering rally to some degree when you have a bear move, extended bear move like what we had, and this is Bitcoin from essentially April, where it topped out and fell nearly 60% into just a few weeks ago, and it's rallied really nicely and now is above 41,000, and Ethereum is back above 2,400. And this is just under really some interesting what was support, but it's interesting resistance now. And I think for Bitcoin now it's about 42,000. So these lines here, 40. But it's been a long time since we were above that level. And but if we can get back above that 42,000 level and stay there in Bitcoin, and then get back above about 25, so about a little bit less on a percentage basis. Well, it's about this, yeah, a little bit more on a percentage basis for Ethereum. Then it could be, yeah, we could be in a good rally mode for a while, but I think it's going to be a process. I don't think it's just going to be, you know, back to 60,000 some odd and on Bitcoin right away. But I think getting back above that level would put maybe the bear case to rest for a little while. It's been a very the bear case has been the prevailing sentiment for the past few months, really since beginning mid-May forward in Bitcoin, and it would put that to rest. But it's got a bit more work to do, but it's had an incredible rally here over the last 10 days. Yeah. The thing that I brought up on Tuesday, I pointed out how this is Mike Novograd's company he's CEO of, called Galaxy Digital, and they're really a merchant bank, kind of the Goldman Sachs of crypto. And I think it's a really interesting play. That's a stock, and it's an investment company. But just last week, it plunged down below 11 for a little while, and it's trading under it, not anymore, but for a little while it was trading under just its stake in one crypto company that they hold stakes in private equity or private equity stakes in companies like Kraken exchange. And for a little while it was trading under the value just of their stake in Kraken, and just neglecting the value of the rest of the company. So and that's just one investment they have. So it's an interesting stock, and it's because it's an ADR that is actually on the Toronto Stock Exchange. I think it's maybe underappreciated because it will list on Nasdaq probably later this year, but it just doesn't have the US listing. So it's a little bit out of the way for some investors. And there might even be certain funds that can't invest in it as a result of that. But and it's a little bit illiquid as a result of that too. And so it's still at a level that's probably, the last time Bitcoin was at 41,000, this was in the mid 20s. So so it may be a little bit overvalued compared to where it is in this compared to historical levels. Of course, Coinbase has less history, so it's harder to tell what the right. Coinbase is fairly richly valued compared to other stocks, but it's the only one of a kind right now. It's the main. It's first true pure play in crypto that is not some slightly shady like mining company or something like that. That I'm not quite confident in some of those, but Coinbase is a blue chip kind of company, managed very well and very, very open and transparent in their filings. But it may be kind of richly valued compared to something like Galaxy.
Well, speaking of IPO, recent IPO, let's talk about the Robinhood IPO. Apparently, it wasn't really a great success as they were hoping for. It was a little bit of a failure. I think they were saying that this is one of the worst IPO, if not the worst IPO opening for their size companies, as retail wasn't really interested in buying this IPO. I guess they're still very bitter with how they handled that whole AMC GME restrictions debacle. But it was basically only open for 2 days, so it's trading in that range of the first day.
It just goes to show you this phenomenon was true at certain places during the .com boom, where the IPOs became such a kind of a meme, that oh, you got in on an IPO, you're going to make tons of money. And there were IPOs early on, like the Amazons and the Googles, and well, Google came a little bit later, but like Amazon and Yahoo and some of those that you got in on the IPO. Netscape was the first of those. You got in on the IPO, and it would open up 300% from where you were able to get in as an IPO investor. But then toward the end of that boom, like in 99 or 2000, it was like, I remember there was one, I didn't participate in it, but I had a chance to, and it was a company called Delta 3 that nobody has heard of now because it's like just vanished into the mist, but it was like mobile communication, and they were going to do something on the internet, and like, and on and on and on, and all the buzzwords, and it opened down just like Robinhood. So maybe this is in a way a signal, when these IPOs can't, when they don't provide the kind of pop, and it's a signal that companies that maybe they're not ready, or they're overvalued from the standpoint of the early investors, that it's a signal in the market, right? Maybe.
No, I mean, it definitely is a possibility. My only concern is that I've read so many people, myself included, who were saying this, this Robinhood IPO, it's gonna mark a top for the market, or at least a local top, like I was saying, for market. But it seems like pretty much everybody is now convinced that this is the case. And fear and greed is also at a very low level. I think today we closed at 25. So it seems like there's just way too much. At the same time, there is a lot of exuberance and a lot of pessimism at the same time in the market, which is a very strange kind of situation.
Well, look at something like, I think that actually what we've seen in crypto is pretty interesting. I mean, yes, we've had this huge rally here over the last couple of weeks, but it was really in a very bearish mode for Bitcoin from April until mid-April to mid-July, so 3 months, and really 2 months for Ethereum and some others that topped out after Bitcoin. So even in the midst of this so-called exuberant market, there was this asset class that was super hot last year and early this year, right? Right up until April, and then 60% off the top. 70, some of these 90% off the top. And so can you say that the exuberance has been knocked out of the market a little bit when you see something like that? I'd say so. I mean, that's there's some of these like that I think it's, we've talked about a lot, like dogecoin or something like that, where if you look at them, they there's not been the rally in dogecoin on a daily basis compared to Bitcoin. And so we can put Bitcoin along with it. And I don't know if it's going to do it right, but no, you got to be careful, because Dogecoin had this huge rally, but just in the last few weeks, there's been this, here we go. So just in the last few weeks, Bitcoin has hugely outperformed Dogecoin. And so it's barely rallied off its low. And I think that it's going to go to new lows. It's done for this cycle. But I think that's the key, is that we're seeing now, it's maybe the second leg up of the bull market, where now we see the differentiation. It's a mature bull market. We see the differentiation between the garbage that was just going up on retail excitement, and maybe more rational investor that is looking at what's the size of the community, how much development is happening, and the hard questions that it takes time to study these things. It's not an easy answer. So, but I think that's this is very telling, that your Dogecoin is just pretty much flat the last few days, hardly going up, and Bitcoin is up a good 20%, 30% off its low.
And speaking of Dogecoin, of course, Elon Musk comes to mind. And there was some book that has, I don't know who wrote it, but it's been just released. And there are lots of rumors and juicy bits from the book about Tesla. And one of my favorite funny stories was that at some point when Tesla was very close to, not bankruptcy, but very close to running out of cash, there was a point when they really badly needed money, there were rumors that Apple wanted to buy them. And according to this book, apparently those rumors were true. Apple and Musk, I mean, Tim Cook from Apple, or as Trump calls him, Tim Apple.
Tim Apple, yeah.
I spoke to Musk, and they were kind of discussing the possibility. And Elon Musk said that he wants to be a CEO. Of course, Tim Cook said, yeah, fine, you can be a CEO of Tesla. He goes, no, I want to be a CEO of the whole thing, including Apple. And according to the book story to this, Tim Apple told him, F you, and hung up.
Yeah.
So, his ambition is Musk's.
Well, there have been some, he said that he's stepping away from giving earnings calls and so on. So maybe there's just some sense among the board that he's, maybe a little bit too online, as they say, right? Mm-hmm. Just a little too online, too public. And they prefer a little bit more of a reserve CEO like a Tim Cook, someone that knows when to keep his mouth shut.
Right, exactly.
Well, I think it'll be an interesting weekend to watch in the crypto market, which of course doesn't close. It might. I'd actually expect to see a little bit of a pullback here in the next few days. It might rally a bit more, but I expect Bitcoin to try to hit this 42K level, but then pull back a little bit. And before if it can make it over, that's great, but it's not. I don't think it's going to happen in one attempt.
All right. Well, thank you, Andy, and we will see you guys on Tuesday.
Right. Thanks, everyone. Have a good weekend.